All right, welcome back to Market Day Report. I am Scott Sheldon, otherwise known as the Cow Guy. It's that Friday feeling, but the markets are kind of, they've got the Friday feeling too a little bit here. They seem to be a little bit tired. Let's take a look at corn. I mean, for all the action that we've had this week, for corn to be up 1.5 cents right now, boy, it just doesn't seem, and we don't even have a 10-cent range in corn, right? Just 9.25 cents in that July corn. July is at 7.31 3/4. That's last. We're up 1.5 cents. We've got decent new crop up a penny to 6.95 1/4, trying to get back to $7. How about soybeans? They had a great day yesterday. They're giving back a little real estate here today. 25.5 cents lower in July. 17.03 3/4 is last. Trying to hold that $17 line. We've got Novi new crop. That's off 14 cents to 15.27 3/4. Now, wheat's also been kind of crazy as of late, but it's down 9.25 cents today in July in Chicago. 10.49 is last. But we've had basically a 33-cent range there. So 33 cents in wheat as of late is not really that big of a range, believe it or not. December's off 8.75 cents in Chicago wheat to 10.72 1/4. Hard red wheat, this is Kansas City. See what they've got going on, trimming some of their losses as well. July's off 13.5 cents to 11.30. And again, that's only been, what, a 37-cent range there for the hard red wheat in Kansas City. 12.5 cents lower in that D's contract to 11.47 1/2, but we're losing between, say, 11 and 13 cents across the board when you look at those products. Spring wheat, what's going on there? Spring wheat in Minneapolis? Well, not a lot. Look at that. We've got July and September sharply unchanged. July is at 11.99 1/2. SEP is at 12.01 1/2. And we go to Dees is down 1/4, which is one tick to $12 even. And then you have March up 1 3/4 cents to 12.02 1/2. We call that a smorgasbord, right? Little something for everybody. How about that? Then we've got cotton. Let's go see what's going on there. July was up. Now it's down a little bit. 2 ticks to 139.09. We've got Dees, the new crop, down 95 points to 119.15. Okay, now that I've got through that, let's bring in Todd Horwitz from Bubba Trading. He's in Chicago. What say you, Todd? What are you looking at here? I know there's it just seems like market's kind of tired, if you ask me, but I'm asking you.
Well, it is tired, and 33 cents in a wheat is like unchanged. It doesn't. I mean, that's nothing.
Right.
I mean, it's been so wild. But look, Scott, I think we're just seeing the dawn before the storm. The individuals trying to sell it off because it's too high here in their opinion before we explode to the upside. I mean, right now I'm a little negative myself, but I know in my mind that we're going to see much higher prices. You can't erase the surrounding factors around these markets that have to push them higher when it's all said and done. And I think that, right now it's quiet. Markets are slow. I don't know when the last time I've seen them this slow. I was talking in between, maybe 20 years since it's been this slow. So it's really a challenge to see and watch these markets. But I think eventually they take off big to the upside, very much like crude oil did, and it continues to do.
Well, I mean, obviously, the producers that are viewing what you have to say are going to take some comfort from that because there's a lot of stress out there, Todd. If you've got the input prices as high as we do, and you start to see the board prices slip like we have done as of late, that really kind of puts the crunch on some of the, the producers out there, and that's probably the double whammy they don't want to see.
Well, of course, that's a double whammy because, Scott, listen, if these inputs go much higher and prices don't stay with the inputs, they're not going to produce. So now we're going to go into even a bigger potential shortage. I mean, we've got some real serious issues when it comes to food for next year and the next couple of years. And if they don't resolve this and we get this inflation, but it doesn't help the grains keep up with inflation, you'll have guys that won't plant and they won't be able to take it out, and that'll be the end of it.
Well, that's exactly what I said, because either A, they'll find an alternative protein, right, whatever that may be, or B, the prices are going to have to go high enough that lets those guys plant again. That's really the only two outcomes I can see. So we'll have to wait and see how that goes. But markets are allowed to go lower, right? That's okay. They do that at times, and you're right. I still feel a little bit bullish about things myself. But at the end of the day, if you have bulls that don't have a strong grip on stuff, they might want to bail out, and if they get nervous, and it looks like that's what we've got going on here.
They shake the tree, Scott, get rid of the weak hands, and then they start running them again. I think that's probably what you're seeing here.
All right, okay. Stay right there. We're going to go away, pay some bills, and come back and talk with Todd Horwitz. He's with Bubba Trading in Chicago after this. All right, welcome back to Market Day Report. I am Scott Sheldon, otherwise known as the Cow Guy, and I use that as a cheap segue. And I'm taking a look at our meats, or live cattle here. Let's take a look at Chicago live cattle. And I can tell you right now, not a lot's happening. We got June down a tick to 133.60, and again, that's not even $1 range over there, and August is off a tick as well to 134.10. So we're not going to dwell too much on this. There's nothing going on over there. Very quiet market in the live cattle in Chicago. Let's go over to feeders and see what we've got happening there. Feeders are a little bit easier. Oh, no, we weren't a little bit. No, we're higher. So we weren't higher. Let's always go higher. 90 cents higher in that August contract. 173.85. September's up 75 ticks to 176.22. And as you go out, the deferreds were up between, say, 35 to 57 cents. So that's a very, very quiet board. We would say that's steady, easy, steady better in the feeders in Chicago. Okay, let's see what's going on in lean hogs. Lean hogs were the one that were lower. All right, we've got June up 2 ticks to 5, which is 5 cents, 110 spot 10. And then we've got July off $1.30 to 110.87. So another quiet board. The meat's pretty quiet here across the board. So I'll get back to our guest analyst and see what he's got to say. But Todd, I don't see a lot here. What do you see?
Well, I see the same thing you see, Scott. Nothing. I mean, if I was on the trading floor right now, I'd be on my way to the golf course because there's really nothing to see here. I am surprised at the strength this week by cattle, though. I thought that, because of the higher oil prices and crude continues to go, I'm really tying those two together here because of budget issues. But it's nice to see them at least hold or start to move higher. Hogs, I think, have found probably a pretty good range between $1 and $1.20. And look, I think that it's going to end up being hogs are going to be, I think, the big winner when this is all said and done, because I do see crude going substantially higher from here because of our energy policy. So I think that it does not bode well for cattle longer term here. But right now, it looks like they're holding up pretty well, and God bless, let them go.
Yeah, I mean, we've got a lot to talk about when we talk about interest rates, the Fed, what the economy is going to do, how that's going to affect our commodity prices. So, I mean, it's going to be definitely an interesting summer. And boy, oh boy, we're just getting started, Todd. We haven't really begun to see what Mother Nature can do, too. So very interesting times indeed. Thank you for being on the show here. Have a great weekend. That's Todd Horwitz, Public Trading. He's in Chicago. We're in Nashville. I'm going to throw this over to Suzanne.